Hi everyone. Uh, this video um, is to help demonstrate how you should approach a document review simulation. Um, there's only been this type of simulation tested maybe for about 4 years, something like that, 4 or 5 years. Um, it um, it scared students, or at least some of them, when it was first added to the repertoire of things they could ask you. It is its addition to the CPA exam is consistent with the idea that they want students to, or at least entry-level CPAs, to be able to use judgment rather than just memorize items. We're moving the CPA exam away from requiring candidates to memorize to instead testing candidates to see if they can use their judgment. Ideally, the CPA exam would resemble everyday life that an actual CPA would encounter. Well, we can never replicate that identically. It's hard to, you can't. One of the biggest challenges is the personalities, of course, that you deal with when you work in a CPA firm, either the other people in the firm or the client. Yeah, that's something that will be difficult to test. But the document review simulations, what's involved with those is you you are writing a letter or a memo or something. It's a written document that someone else has prepared, and then you are asked to look at that document and see if any changes need to be made to that document. And part of what helps you decide whether you need to make those changes is various exhibits that are given you. So here we have a document review simulation, and here's the let's look up top and see what they want us to do. Your company is engaged to audit financial statements of Cherry Inc., engaged in manufacturing of soaps for financial year ended 12/31/2005. As part of substantive procedures, you have to perform a walkthrough for accounts receivable and billing process. The company staff has shared a flowchart explaining the accounts receivable and billing process, and also the formats of various documents related to the process. Your staff has prepared a document as per his understanding, or I should say their understanding, explaining the process of accounts receivable and billing process to be used to perform walkthrough for the process. As an engagement senior, you will have to revise the document and make necessary corrections if needed. So what we have then down here is the document, and and then there are 6 opportunities to, I believe it's 6, yeah, to decide whether or not to, or to decide to look at changes and see. In other words, there's a suggested answer, and that was what was provided by your staff, and then you're going to look at that and see if that suggested wording actually is consistent with what the exhibits show. If it's not, then you're going to choose. Then there are other. You have other options that are given to you, and you have to pick the right one. Now, helpful to knowing what will help you do this is knowing how things should go, but that's not entirely what you need, because how things should go may not be how this company is doing it. So we're a little bit less concerned with how we think things should go than, in this case, whether the description of these processes as created by your staff is actually accurate. Okay, so let's get at it and see how it goes. So the first part of the of this effectively internal memo, right, describing how things are working, addresses the accounts receivable and billing process. The the wording that your staff has given you is: the accounts receivable department receives documents, which includes a copy of the sales order and invoice from the shipping department. Let's take a look at the options that were given. Okay, there is the original text there, and if we don't like it, we can pick one, or should pick one of the next four. Now, if you remember from, if you've looked at the charts that we show in our book, which shows the chart showing the sales process, you would remember that the accounts receivable department does receive these documents: a copy of the sales order and an invoice. But you don't receive an invoice or a copy of the, you don't receive the invoice from the shipping department. That stands out. That stood out to me when I first looked at this. I said, wait a minute, that doesn't sound right. Now, it could be right. Excuse me. It could be what this client is doing. But let's look down at the options that they give us. Option number one: the accounts receivable department receives documents which includes a copy of the sales order and bill of lading from the shipping department. That sounds better, because we know that the shipping department is the one that creates the bill of lading, right? A bill of lading is just a document that indicates what is shipped. Let's look at option two. The accounts receivable department receives a sales order from the shipping department. Well, that is like a subset of option number one there. So again, that could be right. But if you remember the diagram from our book, you'll notice that there should be a bill of lading involved. And then the next one: the accounts receivable department receives the bill of lading from the carrier. We know that would never happen. And the accounts receivable department receives a sales order and customer credit approval from the shipping department. The customer credit approval does not come from the shipping department. So it looks like one or two is the answer, but we're not really sure. So let's go up to the exhibits and click on the accounts receivable and billing process. And let's see what we got here. There we've got, this is from the client. So this is supposedly describing how their systems work. And it says the first thing that happens, first thing that gets AR going is to obtain the sales order and shipping documents. So that does seem to, that right there seems to tell us that the sales order for sure, so is going to be in there. So it's either going to be number one or number two. But it's clearly not just the second answer here. The accounts receivable department receives the sales order from the shipping department. While that's correct, that's not as correct as this first one, which says the account receivable department receives documents which include a copy of the sales order and bill of lading. So I'm going to answer that one. Okay. Now, at no point was bill of lading mentioned up here. So that would be, you know, your chances of getting this right is a lot better if you know that who creates the bill of lading, the shipping department. Okay, but you should have been able to rule out if you knew that going in, you'd very likely pretty quickly arrive at the answer that we picked. But if you didn't know it, you could still, there's still a good chance that you'd be able to figure it out because some of the answers are just not obviously correct. Uh, let's go then to the next one. Okay. The next one says the amount due to be obtained is to be obtained either from the sales contract or the sales quote. Okay. Let's click on that, and we have choices. We can either agree with that, or we can select something else here. Now, let's look at the answers and see if we can rule them out. The amount due is to be obtained from the bill of lading. That would never be the case. The price of the goods is not on the bill of lading. The bill of lading only indicates what is shipped. The amount due is obtained from the invoice. That certainly is certainly that is something that conceivably could be the answer, right? We're going to send them an invoice. The amount due is obtained from request for quotation. I've never heard of request, so that doesn't sound right. And the amount due is obtained from the customer purchase order. No, the customer purchase order will not necessarily show what is due. It will show what is ordered. So, we're not sure here. But again, it's looking like it's, well, let's take a look at the sales quote up here. And there's the sales quote. And there's a total. That certainly looks, that looks, I think, fair to me. That looks like that would be, that's what we're quoting them. That's our quote for what the stuff that they're buying would cost. So that certainly seems reasonable. What else do we have? Invoice. Let's look at the invoice. Now, invoice also seems to, that does seem like it could be correct there. Total due, due on receipt. Yeah, that doesn't seem like a wrong answer. Can't really completely rule it out. Contract for sale of goods. What about that? Let's see, let's take a look there. I don't really see any pricing there, so that's probably not it. All right, so the amount due is to be obtained from either the sales contract or the sales quote. Doesn't look like the sales contract shows a price, right? So I'm not sure we're going to use that wording. Again, I'm going back to that just to confirm. This is really exactly what you'd be doing on the exam. Do you see a price there? I don't. Sale of goods, invoices and payment. This is more a description of what we're obligated to do. So I'm going to select the amount due is obtained from the invoice. Okay? Notice I haven't confirmed anything yet. We have a chance to do that. We can do that later. Now, then we have the third sentence that we're asked to see if in a letter, or I should say in the internal memo that we're asking to see if it's correct. The sales quote has to be approved by the shipping department. Now, right off, that doesn't make any sense. That doesn't make any sense. Who has to approve the sales quote? Well, the quote is given to the customer, right? So that to me sounds like we would hope to see an answer like that, and there is one there that says that. Then it says, but let's look at the wrong answers. Could the sales quote be approved by the sales department? Well, the sales department made the quote, so they're not going to be approving it. The credit department approves the sale, but not the quote. So I'm going to go with that one. And actually, it's funny. It looks like we have some information. Let's come up here to confirm. Sales quote. Yeah, this is being sent to, this is prepared by the company, and it is sent to the customer. You can see that the quotation is prepared by someone in the company, and then this next line item down there, it says, to accept this quotation, sign here in return. That confirms it then. That one's going to be from the customer, or it's going to be approved by the customer. Okay? All right, we gotta wait. We still got a few more to go. The accounts receivable department will then post the amount due from the customer to the account receivable control account. The again, this is a you know, if you are familiar with the flow chart from our book, you do know that the accounts receivable department is going to post the amount due to the subsidiary account. They would not, if there was a posting to the control account, that would be done by the accounting department, not AR specifically. But we don't really see an accounting department anywhere in here. So let's see if we're already leaning though to the idea that this is not the correct wording. Let's look at the options they give us. The account receivable department will then post the amount due from the customer to the customer's individual subsidiary account receivable. That sounds right. So, but let's still look at the other answers because there could be a better one. The accounts receivable department will then post the amount due from the customer to the accounts receivable aging schedule. No, they wouldn't do that. The aging schedule is created by the credit department. The accounts receivable department will then post the amount due from the customer to the accounts receivable open statement. And then another one, the sales department will then post the amount due from the customer to the customer's individual account receivable. No, that would be a violation of segregation of duties. I think it's going to be that one. The accounts receivable department will then post the amount due from the customer to the customer's individual subsidiary AR. Okay? That looks like the best answer. All right? Boy, I hope we're getting them right. Let's go on to the next one. So now the letter, apparently the letter itself says a business sales invoice is prepared and mailed to the customer, and that's not one of the line items that we're asked to check to see if it's correct. But this next one is. All subsidiary accounts are added and balanced manually to the AR control account or daily on a daily basis. Now the issue of manual, you know, when I think of manually, do most accounting departments, is everything done manually, or is there a computer involved? So that certainly is odd to me that you'd be balancing them manually to the control account in the 21st century. But let's look at what we see here. We see that here again. We're now looking at the accounts receivable and billing process flowchart. And so AR. Let's look down at the AR does prepare the invoice. They prepare a monthly statement. They prepare the aging report. Oh, and by the way, forgive me, I said a moment ago that the credit department produces the aging report. That's not correct. It is accounts receivable. It's the credit department that will approve write-offs in most cases, well, in almost all cases. Now we're still not. Oh, there it is. Look, it says IT systems balance subsidiary to control accounts. Okay, well that does confirm then that a computer is involved, so we know the writing here is wrong. We don't do it manually, so let's come up with the right answer here. Let's pick the one let's pick the best choice here. All subsidiary accounts are added and balanced to accounts receivable control account on a daily basis by a computer program. That looks like it could be right. Any answer that says manually is not going to be right. All subsidiary accounts are added and balanced manually to the control account. No, we know that's not correct. And that says annually. Oh my goodness, we wouldn't be doing it annually anyway. All subsidiary accounts are added and balanced to the sales control account. And that's not. So those are wrong. And then the last one, all subsidiary accounts are added and balanced to the sales control account on a daily basis by a computer program. No, it says AR is going to would be posting to accounts receivable, right? Because if the sale has been made, and so we're going to we want to now create an AR, so we're going to go. I'm going to pick this one. All subsidiary accounts are added and balanced to the accounts receivable control account on a daily basis by a computer program. That sounds right. Now, it didn't say daily over here, did it? But that's the kind of activity that would normally be done on a daily basis. Stuff is entered daily, and then the computer checks to see that the subsidiary accounts match the control account. Okay? All right, let's keep going. Notice, by the way, we've really only used a couple of the exhibits. Many of the exhibits that they give you, are just because they give you an exhibit doesn't mean that you're going to use it. You may use it or you may not use it. Some exhibits are going to be more important than others. Some questions you'll be able to solve by even with not looking at the exhibits. Although it's generally good to try to come to an exhibit or to try to look at an exhibit to confirm what you already think. Some things you will not be able to solve at all unless you look at the exhibits. We really haven't had that here too much in this one. Okay? Now, what's the next one? A balancing report is produced and distributed to management for approval if the totals agree. Balancing, of course, is one of the things that an internal control is that we have is that, or that should be in the system, is to have the different departments come up with an answer, and then if the answer is the same, then that's a good sign that things are correct. If one department comes up with one answer and another one comes up with a different answer, we need to investigate that. So if we look at again, this flow chart is really where we're going to start. See if we can. That's what's really going to help us with this. AR, a balancing report, is created through accounts receivable, right? And we follow the line here. The line there is the aging report. So the aging report tells us which the aging report tells us who is way behind on their payments, and at some point when they don't make their when we are just not getting paid, we have to write that account off, right? Or we can go to the customer and maybe try to work something out. But like it looks like in this case, they will they may offer they may say to the customer, okay, we're going to convert this AR into a note receivable, and then you're going to have to pay us interest. But before that decision is made, we're doing that that balancing report is telling us if the control account, right, matches the subsidiary accounts, and then management ultimately will decide whether whether we're going to have to write the account off. So let's see what our options are. Again, the line item that was given to us that our staff made for us is a balancing report is produced and distributed to management for approval if the totals agree. Well, you would think that if the totals agree, then that seems to be a pretty narrow. What if the totals don't agree, right? Let's see. Let's look at this one. A balancing report is produced and distributed to management if the totals do not agree with one another. Then management will investigate the reason for discrepancy. That sounds good, because that's what you would do if the two totals don't match. Then you're going, if the subsidiary ledgers, and that's what we're comparing, is the total of the subsidiary ledgers to the control account, control AR account. If they don't match, you definitely need to investigate that. You would be less inclined to investigate it if totals agree. So it looks like that's the answer. Let's look at the next option. A balancing report is produced and distributed to the customer. Obviously not. A balancing report is produced and distributed to the customer. No. So we can rule those are obviously can be ruled out. You should be able to rule those out without even looking at anything. And then 6, a balancing report is produced and distributed to management if the totals do not agree with one another. So it's really between this one and that one. Will management investigate the reason for the discrepancy? Yeah, we're not. The balancing report is going to be submitted to management regardless. So if the two totals do not agree, then they will investigate. Okay, so I'm going to select that answer there. Now then, we're almost done. The number 7 here, or the last one, before we get to the aging schedule. The invoice contains information as to goods shipped, quantity, price of the terms, payee, total due to the related amount due in the related customer purchase order. That's the suggested. That's the suggested wording. Let's see if we agree with that. That looks good to me, actually. But let's see if they have something different. Let's see if we can see something better down here. The bill of lading contains information as to the goods shipped. Now, the bill of lading only shows, well, it does show that, but it doesn't show the price and the payee. So clearly that's not the right answer. The next one, sales quote contains information as to the goods shipped. Well, no, it's the goods haven't been shipped yet. So the sales quote contains information. The sales quote talks about what the price would be if the customer accepts it. We haven't shipped anything yet, so that's not the right answer. The invoice contains information as to the goods shipped, price of the items, payee, total amount due and related customer purchase order number, and past due accounts. No, invoices don't normally show past due accounts. Well, they sometimes do, but they, but that certainly looks like that's close to the right answer. And then finally, the bill of lading contains information as to the goods shipped, price of items, payee, total amount due. We know that's not the right answer because the bill of lading only shows amount shipped. So really, it's a battle between this one here. The invoice contains information as to goods shipped, price of items, payee, total amount due, and related customer purchase order, and past due accounts, and the original information. So how can we determine that? How do we pick? Well, there's an invoice. Let's go up and look at their invoice. And there is the invoice. And I see quantity, description, unit price, total. I don't see anything here about things past due. So I am going to pick I'm going to pick that one. No, I'm going to stick with the original text there. Okay, we're not going to change that. All right. At least that's my intent at this point. Now let's do one more here. I don't think I'm not going to do every one because this video is longer than I expected actually. Um, but let's look at this one. An aging schedule is prepared daily, and this report contains all delinquent accounts receivable. I'll be honest with you, that looks right, but well, except that you don't prepare it daily, right? You prepare it periodically. So without even looking at the answers, and then I look down, that one looks right to me right there. An aging schedule is prepared periodically, right? It doesn't have to be prepared monthly. Although we have the aging schedule will show the current what's currently due as well as the delinquent one. So that makes the answer I initially picked probably wrong. How about this one? An aging schedule is prepared at least monthly, and this report contains all current accounts. An aging schedule is prepared annually. No, you're going to do it. That's not right. You're going to do it monthly or periodically, but you're not going to wait annually. And then this one, an aging schedule is prepared periodically, and this report contains all the current and delinquent accounts receivable. That actually looks like the right answer, but let's look at their aging schedule up here. And here we go, total due, currently due, 0 to 30, 31 to 60, 61 to 90. So definitely it shows current and older than that. So all the accounts are shown, both delinquent and current. There's no information here about when this is done. So based on that, I am going to go periodically. Okay? All right. Let's see how we did with the ones that we answered here. These are actually kind of fun. So we're going to confirm that one. We're going to confirm that one. Confirm that one. I could have confirmed them before this. Confirm. Confirm. How many more do we have? Got a couple more here. Confirm. Confirm. And confirm. Now let's submit. And let's see how we did. Okay. All right. So in the first one, it gives us the let's see. There are the explanations down there. Okay. And we did get the first one right. The accounts receivable department receives documents, which includes a copy of the sales order and bill of lading. If it's a green answer, then we got it right. Looks like we got this one wrong. The amount due is obtained from the invoice. The correct answer apparently is the amount due from either the sales contract or the sales quote. And let's go down and see what. Let's see what else. Before we get. Looks like we got a few. Let's take a look at number 3 here. The accounts receivable department will then post the amount due from the customer. The customer's individual subsidiary account receivable. That's correct. A business sales invoice is prepared and then mailed to the customer. Remember, that was one that we didn't decide that one. The next one, all subsidiary accounts are added and balanced to accounts receivable control account on a daily basis by a computer program. That's correct. 6, a balancing report is produced and distributed to management. If the two totals not agreed with another, that's correct. And the original text for number 7, the invoice contains information as to goods shipped, quantity, price, and items in the related customer order. That's correct. Good. Now, we didn't do most of the other ones here, but we did do this first one, which we got wrong. An aging schedule is prepared periodically, and this report contains all current and delinquent accounts receivable. The correct answer was it was prepared monthly. It should be prepared monthly. Now, I didn't see from the chart here that I didn't see that that it said monthly here, but if you look back at the invoice, right? If you look at the invoice, or rather the aging schedule, you remember that it was broken up into it was broken out by monthly. So we really should have, that was a pretty strong indication there that generally it's done on a monthly basis. But in my personal experiences, I've been with companies that it's not always been done that way, but the standard is that it should be done monthly. Anyway, this was great because we did 8 of them, got 6 right, and missed 2. And they and if you did that on the CPA exam, you get most of the credit. They're not going to expect you to get every one of these right. But they do want you to get a significant number of them right. Obviously, 6 out of 8 is 75%. So by that standard, you would have passed. But 6 out of 8 on the CPA exam would have probably given you more like 85% of the credit or 90%. Because again, the examiners are not expecting you to get every one of these right. They will give you close to 100% of the credit if you get most of them right. Okay? So I hope this kind of makes sense. We've been talking for 37 minutes. You wouldn't want to take that long, or I should say, this video is 37 minutes old. You wouldn't want to take that long to do this problem. Probably 20 minutes or 25 is really the most you'd want to allocate to it. But you certainly have time to do some pondering. And as you saw, the way you solve the problem is you look at you read the question, right? Then look at the answers available, and if the answer is very quickly available from that, you can pick it. But more likely than not, you'll have to look at you'll have an idea of what you want to answer by looking at the options given. But then you should always go back up to the exhibits and see if you can confirm the conclusion you came to. Okay? All right. Happy studying, and I hope this helps you. Feel free to contact me anytime if you have questions. Bye.